Hello and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this afternoon. Well, it's turning out to be a good session for the market, so no complaints. We're above 20,000 currently for the Nifty. We have the mid-cap index, which is up almost around 300 odd points, and the bank Nifty, which is rallied around 1% odd. So we have a lively market and a lot of questions I'm sure that investors, retail investors have on specific stocks. So let's get going in terms of a couple of queries that we have. Joining us this afternoon, we have Sharad, Avasthi, Head of PCG Research at SMIFS, and Vaishali Parekh, Head of Tech Research at Prabhudas, Lilladher, to answer all of your queries this afternoon. Sharad as well as Vaishali, welcome to the show. Well, let's get talking about a couple of the questions that we have. But before that, Vaishali, I wanted to start the show by asking you about the next levels to watch on the Nifty, considering that now we're above that 20,000 odd mark. What is the next level on the upside that you would look for when it comes to the Nifty, where we might hit resistance points? And when can we get to all-time highs then?
Very good afternoon, and thanks for having me on the show. Yes, we saw a good consolidation for a pretty long time. And now today we saw, since yesterday, in fact, we saw a decisive close above 19,850. So now we have the next projected target of 20,500. So of course, for that, now our support levels are elevated to 19,800. 20,200 could be the near target resistance, and after that, 20,500. So likewise, even Bank Nifty, today we saw a good break coming out about 44,200. So now, in all likelihood, once we see a close above these levels, we would be expecting a next target of 46,000. So the view becomes buy at every dip for now.
Okay, all right, buy at every dip. So that's the view coming in for the markets, bullishness there. But let's get in a query now. We have Tanvi Ahuja, who writes to us from Hyderabad. She holds 20 shares of Raymond, which she's bought at around 400 odd rupees, and she wants to know what to do, whether she should be worried about the controversies surrounding the company at this point in time. Well, that is a very pertinent question. And Sharad, I'm going to toss this over to you. What are you recommending to people who have invested in Raymond? For example, Tanvi is sitting on a great profit when it comes to that. Do you think that there could be a significant correction when it comes to Raymond in case this issue lingers? And what would you advise her?
See, if a change in promoter or some of the one or two of the promoters have to move out of the board, that is what the investment committee has been asking for. That would be a bit negative, because I think after a long time, Raymond was finally falling in place with a focus on three major divisions: textile, engineering, and I think with the sale of the Park Avenue brands to Godrej, they had more or less streamlined the segments they want to work on. Real estate for them is doing very well, and is expected to do very well as well. I think this quarter even the numbers should be good from the retail and clothing side also. Within clothing, B2B is also doing very well. They have some strong brands on the list. If you do an SOTP, I think the fair value for the fashion retail, etc., should be around 2,000 bucks, and the other businesses should contribute another 200, 300 to the SOTP. So the fair value is substantially higher from current levels. I think real estate should do well, textile should do well. Coming back to the recent issue, if the top management has to move out, it may take some time, but I think most of the correction is already there in the price. We have most probably corrected 500, 600 bucks from the top. I think most of it is already pricing in the controversy that we are into. The biggest challenge is that some funds are being used. The allegation is that they were being used by one of the promoters for his personal uses. So if that does come up, that's a problematic thing. But I don't think something like that is going to pop up. But somehow or the other, Raymond keeps falling into controversies. So simply talking about numbers, I think I have faith in the numbers. I think even if the management is replaced, it might be a bit of a waiting game. You might not see immediate recovery out of it, but over a period of time, I think business fundamentals should catch up. I think holding for a target of somewhere around 2,000, 2,100 would be a decent idea.
Okay, all right. So that's quite a steep target there. But Vaishali, would you agree, while you can't comment on the fundamental aspect of it, the stock is corrected around 10% plus in the past 5 odd days. Technically, is there more weakness?
I think most of it is already done. I mean, right now, currently it's at 1,500 odd levels, but 1,490, 1,480 holds to be a crucial support level, and we are already in the oversold zone. So I don't see much of a corrective move coming in. I would say rather one should start accumulating from these levels.
Okay, all right. So that's the view coming in on Raymond. Let's get in another query now. We have Shashank who writes to us from Patna. He holds 30 shares of Nykaa, which he's bought at around 130 odd rupees. He wants to know what to do, whether he should remain invested or whether he should sell at current levels. So remain invested or sell at current levels. He's bought it at around 130 odd rupees. Currently sitting on a profit. So what would you recommend on this one? Sharad, you go first.
Yeah, I think unless and until you have a very long vision to stay into the stock, it does not really make sense. Next year, we are targeting what 1 rupee 50 paisa kind of in earnings right now. But at the same time, the way the management is working around with the company, the new retail stores that they are putting up and that they have put up over the last year or so, I think that will start contributing in a big way. The BPC segment is doing very well. The fashion segment should also pick up, and growth within the premium segment could be very high over the next 5-7 years. And this is a place I think where you would have advantages of scale coming in very substantially for the company. We have already seen something like Honasa doing very well because of the numbers being good. Nykaa, though usually we just consider it as BPC, I think the other fashion vertical is also ramping up very well. And I think in the years to come, it could be a force to reckon. The valuations are a bit steep, so unless and until you are into it for around, say, 5 to 6 years, I think it's better to exit at these prices.
Okay, all right. Vaishali, what would you recommend on Nykaa? Your view on the particular stock technically?
So technically, I would say the stock has already got into a trend right from 135, 140 levels, and right now it's just going through a minor consolidation. So I would say one should hold this stock with a stop loss of 165, because if 165 levels break, then there could be a change in the trend. But otherwise, hold on, because in all likelihood, this stock can do around 190 to 200. So keep a stop loss of 165 and ride the rally.
Okay, all right. Stop loss of 165 and ride the rally. That's the view coming in on Nykaa. Let's get in another query now. Prateek Shah writes to us from New Delhi. He holds 100 shares of Suzlon, which he's bought at around 10 odd rupees. He wants to know what to do, whether he should be able to generate good returns or not. So Suzlon, from his buy price at least, has given good returns. So he's sitting on a profit. Would you recommend probably adding on to these levels, Sharad? What is your view? Because it's seen a strong rally, Suzlon. But fundamentally, does it warrant further returns?
No, from current levels, I think it will be a bit difficult unless and until you extend your horizon to 3 years and beyond. The scenario around wind power has substantially improved over the last 1.5-2 years because of the change in the policy. And the renewable repurchase obligations have also been put in place. So that's also very positive. There is a huge opportunity of 40,000 crore for repairing of upgradation of older windmills also. So that also comes in, and on an annual basis, we are expecting 6 to 8 gigawatt of wind power addition. So that should hold Suzlon in good stead. And the current utilization, even if you consider the order book, which is around 1.6 gigawatt, they have capacity of around 3 to 4 gigawatt. So capacity utilization ramp up is something that could happen. Next year, we are expecting somewhere around 1100 crore at the bottom line level, 1100, 1200 crores. And beyond that also, you can expect 20-30% appreciation. But considering 1500, 1600 crores, I think the current market cap of around 55, 60,000 crores roughly takes into account most of the positives. And there is a lot of R&D happening within the space. New technologies could disrupt things, and the change of government policies is also a risk. But it is in a sweet spot. The industry per se should continue to grow at a very healthy rate. But 30 times 2 year forward, I think it more or less fairly discounts most of the positives. So I think fair value for me comes to around 32 to 35. And I think it's more or less fairly valued around that levels, and it's trading at a price above that. So it's better to exit at these prices.
Okay, all right. 32 to 35 is a fair level for Suzlon. So it's trading above those levels. Vaishali, would you concur? Because this stock has actually defied gravity this year. You know, on a 1 month basis, it's given returns of 20% plus. 6 months, it's up over 250 odd percent. What would you recommend? Do you think that maybe one needs to be a little cautious now?
In fact, my view would be strongly to book partial profit, because technically, if you see, the rally has been non-stop going on right from rupees 8 to making a high of 40 odd levels. And right now we are seeing some exhaustion, some reversal in the trend. And I think whenever the correction occurs, whenever there is a corrective move, this stock can go to 3028 levels. So I would say definitely book partial profit. And again, one can re-enter at lower levels, starting 3032 levels. Yes.
Okay, all right. So that's on Suzlon. Let's get in another query now. We have Shajir Mukam, who writes to us from Madhya Pradesh, holds 7,000 shares, which he's bought at around of BPCL, the oil marketing company, at 395 odd rupees. So sitting on a good profit there. Wants to know what to do, whether he should stay invested or whether he should take some profits off the table. Vaishali, over to you on this one.
So depending on what the time frame is, because we have once again seen a good rally coming in this, but having said that, it doesn't mean that there is exhaustion. If he has a longer period time frame, then I would say this stock is ready for a target of 440 to 470. So keep holding on with a trailing stop loss. And of course, if he's been a short-term trader, well, no harm booking partial profit.
Okay, all right. Quick word, Sharad, on BPCL?
I think continue to hold for targets of around 500, 525. Even at 9 times, I think that would be the target. The earnings are expected to be stable. We expect oil prices to be lower, so that should help most OMCs. Valuations still are very comfortable. We are trading at somewhere around 7, 8 times. I think there is a possibility that it oscillates to somewhere around 9 to 10 times. So 500 to 525, even the dividend yields should be very robust. Most probably today or tomorrow, they have a dividend meeting also. So dividend yield should also be robust for most OMCs. I am expecting another 20-25%. So by BPCL, I think hold for targets of 500, 525.
Okay, all right. So that's the view coming in on BPCL. Just want to point out that there are a couple of these hospital stocks which are taking it quite weak. So for example, Fortis Malar, that stock rallied yesterday. It was up around 4-5 odd percent. Today it's seeing profit booking. That stock is down around 4 odd percent today. Yatharth Hospital, there has been some issue with regards to the MP hospital that they have, and you can see that the stock is at the low point of the day. It's down quite sharply as we speak, so down around 11 odd percent for Yatharth at this point in time. We'll do one thing, we'll take a break, but we'll answer more of your queries on the other side. Stay tuned, we'll be back. Welcome back. You're still tuned into Your Stocks on CNBC TV18. We still have with us our fundamental expert for the afternoon, Sharad and Vaishali, on the technicals to answer all of your queries. Well, let's get in another question now. We have Sakshi Taneja, who writes to us from New Delhi. She holds 30 shares of Indian Hotels, which she's bought at around 200 odd rupees, so sitting on a profit there, and wants to know what to do, whether to book money off the table or stay invested. Well, what would you recommend on a stock such as this, Sharad? Because, you know, the business, the management is so bullish in terms of the business. They're targeting steady growth. They're looking at diversification strategies in order to have less cyclicality in terms of the revenues and the business cycle. So what would you recommend on a longer term basis?
Generally, also, I think hotels business is on a strong footing. The only thing is that they have run up a bit. So, but I think this quarter's number should also be pretty good considering the World Cup and then the festive season, and follow that up with our holiday season. I think all that should couple up very well for most total stocks. The average room rents have been going up, occupancies have been going up, and Indian Hotels has premium properties. I believe it would be less prone to any kind of short-term cyclical downturn, which is not something like a COVID or something. But I think normally there should be very little impact of slowdowns or something on properties of Indian Hotels. So I think by 24 to 27x EV EBITDA, it is just less than fairly valued. So you can continue to hold. I think over the next quarter or so, if it goes up by another, say, 15-20%, that would be a good time to probably exit the stock. and wait for some correction and then probably re-enter.
Okay, all right. And what's your view, Vaishali? The stock has done well. Is there more to go?
Yes, of course, there is a follow-up in trend, and I would say keep a stop loss of 410, because if the stock goes in sync with this upward move that we are witnessing in the market, this is likely to go towards 440, 470. 470 should be the strong resistance, and that is where one should book profit.
Okay, all right. Let's get in another question now. We have Rahul who writes to us from Chandigarh. He holds 30 shares of Zomato, which he's bought at 120. He wants to know what to do, whether he should stay invested or book his minor losses when it comes to Zomato. So just about breaking even on this one. What would you recommend on this technically, Vaishali? Let's start with that. Zomato, do you think that it'll probably, surge past these current levels, and what would your target be?
See, the long-term trend is very much intact, and after making the recent high of around 123, 125, it has just taken a minor corrective move and once again back on the support. So I would say 112, 113 acts as a crucial support level, and in all likelihood, we can see the stock moving past 125, because when you see the larger time frame, we have a projected target of around 140, 145. So that is what I would be looking at.
Okay, all right. And fundamentally, there was some large trade which took place today. But X of that, Sharad, what would you recommend on Zomato?
See, I think the turnarounds are very steep and swift in these companies. Earlier, we were modeling with a loss. Now we are working with a positive earnings number. So things can change very fast because of the scale at which they operate, and the per unit metrics obviously changes very substantially. I think the ONDC scare is behind us. Most probably the innovations regarding Blinkit and where it would go, most probably over the next year or so, Blinkit might turn profitable as well. So that could be a very positive development for them. In terms of valuation, I think if you are looking at FY26, you are valuing in 3 rupee kind of earnings. So 37, 38 times of that for a company that is growing at the bottom line is growing at around more than 100%. I think it's a decent valuation. It cannot be called very expensive. So I think it would be better to do it on an EV to sales basis. So it is at 6.7. If you are willing to just wait for around a year or so, I think the upside could be very limited, 5 to 10%. But in case you are willing to extend your horizon to see through the FY26 numbers, that means 18 to 24 months literally, then you could be looking at a 25 to 30% considering an EV to sales of around 7 on FY26 numbers. So I think then you can expect upside of around 25 to 30%. But if you have a much shorter horizon, which is 1 year or less, I think not much upside should come into that stock.
Okay, all right. Well, let's get in last query for today. Akriti Jain writes to us from Bhopal, holds 20 shares of Tejas Networks, which is bought at around 500 rupees, wants to know what to do, remain invested or exit at current levels. Well, fundamentally, it's looking very good in terms of, how the company has been reporting order wins and the kind of momentum it's been showing. But what's your view, Sharad? Do you think that Tejas Networks has more to go, sitting on a profit right now for Akriti?
Yeah, I think she should continue to hold on. The big boost has been the BSNL order that they've gotten via TCS, obviously. So a company with an order book of around 2,000 crores. Now we are talking about a company with an order book of somewhere around 9,500 crores. And most of this should be executed over the next 1.5 years. So the numbers would look much better. Right now, we are looking at a company with sales of 400 crores in a quarter. I think that will substantially go up. And if those numbers are to culminate, I think the opportunities will be huge for 5G, etc. also. And this was a good company even after the IPO. But now with the management bandwidth from the Tata side coming in, I think the group entity support is a huge thing for them to develop into level 2. They were already competing with the likes of Huawei, etc. So now with their bandwidth certainly expanded, I think they can bid for much larger products here as well as internationally. The 5G new gear on 5G they have already launched, which should also start contributing. And there is also an O&M part to this order, which extends to 9 years. Ideally, it should be around 1,000 crores. So I think more or less you're looking at a company which should do very good growth over the next 1.5, 2 years, etc. at least. So I'm looking at an EPS of somewhere around 30 maybe for the company. And for a company of this kind and with the backing of Tata's, I think you could easily look at 35 to 40 kind of multiple. So I think 1100 to 1200 could be the fair value for the stock. But you might need to look through this 1.5 year where regularly you see quarterly numbers improving for the company.
Okay, all right. Sharad and Vaishali, on that note, we're going to wrap up on the show. Thanks very much for joining in, as always, and answering all of our questions. You have a great evening. That's all the time that we have on the show. But do remember to email us your queries, and we'll address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade this Wednesday.